Hello and welcome everybody. I'm Vern Cushenberry, Chief Investment Officer, and I'm back with another quarterly update or annual update as the case may be. Happy New Year to everybody. Let's do a quick check-in. The markets were up 28% last year. That was the total return, and that continues a streak that we've been on through the COVID lows with a lot of stimulus and a lot of efforts by our regulators to make sure that we weather the storm. Well, as I talk to investors, there's a lot of concern out there about valuations, about interest rates, about inflation, about Omicron, and how we're going to navigate these waters. I think it's very important that we take a long-term historical perspective and recognize that there have always been returns available to investors who, A, are willing to exercise a little patience, and then B, are willing to kind of peer into the market and understand the different pockets of opportunity that are available to us as an investor. And that's really what I want to talk to you about this quarter. So let's get into that a little bit and start with valuations. I share this slide every quarter because it frames up where we are. This is the price to earnings ratio of the S&P 500 index. You can see historically that ratio up around 20 is what we consider to be expensive, and down around 13 would be cheap. Well, we're expensive. So what does that mean? Well, it means that we have to take a little closer look at the markets relative to history and peer into some of those pockets of opportunity. And I want to share with you this quarter some of those that we're identifying, one of which is value stocks. Value stocks just in general are those that trade a little bit cheaper. They have earnings and their price to earnings ratio is a little bit cheaper than what we would call growth stocks, whose price is dependent upon the future growth of those earnings. And we can segment those two groups of stocks and track their relative valuations, and we do that. And that's what this chart here on the left shows, is that relationship. And this dotted green line shows the long run average of that relationship. And you can see that when the gray is above that long run average, we think of growth stocks as being more attractive. And when it's below that green line, we think of value stocks as being more attractive. And at this point in time, value stocks are, relative to growth stocks, are at a point where they're, we haven't seen this since the late 1990s, early 2000s. And that to us helps inform our asset allocation decisions. And we would never take 100% allocation to any segment of the market, but at the margin, we can ever so tactically and subtly shift our exposures to those segments that are a little bit cheaper, a little bit more attractive. And we absolutely do that on a daily, on a weekly, on a quarterly basis. And then on a quarterly basis, I take the opportunity to report back to some of our investors what we're seeing in the market. And I don't have time in these videos to communicate all those points, but some of the most salient, I always want to make sure I capture. This is a different perspective on some of the same data. If we look at the current price to earnings ratios relative to history for different pockets of the market, you can see that large cap growth stocks, so Facebook, Amazon, Apple, Netflix, their current price to earnings ratio average is about 30.6. Well, historically, it's only been 18. So that premium is 165% of what it's been historically. That's a big premium. As we look at other pockets of the market, we can see that large cap value stocks trade at a premium, 115%. It's more reasonable. What about mid cap value? 108%. What about small cap value? Aha. Now we've actually found a segment of the market that looks cheap, looks more attractive relative to where it has traded historically. So again, we're using this data to inform our asset allocation decisions. And at the margin, we can ever so subtly shift our portfolios so that we have a greater exposure to some of these, I'll call them pockets of opportunity. Okay, let me also share with you, I wanted to share slide number 18 here. Of course, we have to talk about COVID. Slide number 18 shows confirmed cases plotted against fatalities. You see here that confirmed cases and fatalities, well, they had moved together until Omicron. And let's pray that these confirmed cases, which have absolutely skyrocketed, don't result in increased fatalities. We don't know that yet. I've heard speculation that Omicron might be less severe, but time will tell, and it's absolutely a data point that we monitor ongoing to make any necessary adjustments that we might need. Two more slides, again, talking about those pockets of the market that might represent opportunities for investors. I want to go down here to slide number 45. This slide deck is available to anyone upon request, by the way. Slide number 45 talks about international stocks. So just like we talked about value stocks might be representing a place in the market that's it's opportunistically priced, international is the same way. We track the relationship between prices of international stocks and domestic stocks, and this purple line right here represents that historical average. Well, you can see as the US markets have been on a terrific run over the last couple of years, international stocks have not. And that has resulted in international stocks trading at a steep discount to what they have traded at historically, now down to levels that we haven't seen. Well, we haven't seen these levels in the last 20 years. That is a 3 standard deviation event. And for those of you who are statistically minded, you'll recognize that 3 standard deviation event is an occurrence that we see less than 1% of the time. So this is another one of those pockets of opportunity that we look to when we're establishing our asset allocations on behalf of our clients. And then lastly, this is the same data presented a little bit differently. We look at global valuations. I shared this first data in a different format on the second slide. When we look at the United States, the current price to earnings ratio is towards the higher end of the range and significantly above the historical average. Well, let's pan out to Europe. Europe looks more fairly valued relative to its historical average. What about Japan? Japan's actually trading at a discount. Emerging markets, a little bit more fairly valued. China, a slight discount. So again, I share this because when I talk to investors, valuations, hot topic, inflation, hot topic, interest rates, hot topic, Omicron, hot topic. We can't predict what is going to unfold in the markets with regard to all of these, but we do recognize that some of these data points should be used to inform our decisions as we tactically seek to reduce our risk and maximize our opportunity set across all of these various pockets, market segments, industries, so on and so forth. So that's my quick update for the fourth quarter. Moving into 2022, I will be back in another 3 months with a market update. In the meantime, please reach out to me with your questions. I'm always looking for feedback. I'm always looking for engagement. Any questions that you have, I'll be happy to address in one of these videos. And until then, thank you very much for your time. Take care.